Good afternoon, traders. The S&P 500 closed above 6,900 today, and yet, for the seventh consecutive session, VIXShield said, hold. Welcome to the VIXShield Daily Market Summary. Market Close Recap for Tuesday, April 14th, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. Today we cover what markets actually did, why volatility is telling a nuanced story, and perhaps most importantly, why the discipline of not trading is sometimes the most powerful trade of all. Let's walk through it together. The S&P 500 closed today at 6,967. That is a meaningful move, up roughly 1.2% on the session, continuing what has been a strong recovery off the March lows. In fact, the index has now rallied more than 8% from those lows, and the Nasdaq is reportedly eyeing its 10th consecutive day of gains. That kind of momentum commands respect. Now the CBOE Volatility Index, known as the VIX, settled today at 18.36. Yesterday it stood at 21.04. That is a drop of nearly 2.7 points, or roughly 12.7% in a single session. That is not a small move in volatility. When fear retreats that quickly, it tells you something about how the market is repositioning. The 5-day moving average for the VIX sits at 20.95. Today's reading of 18.36 is approximately 12.3% below that average. When spot VIX trades well beneath its recent average, it signals that near-term fear is fading, and that environment, in general terms, is more favorable for options premium sellers. Now the term structure. The VIX measures near-term implied volatility, roughly 30 days out. The VXV, which measures 3-month implied volatility, came in today at 20.81. The spread between those two readings is approximately 2.45 points, with the longer-dated measure sitting higher. That condition is called contango. Simply put, contango means the market expects more volatility further out than it does right now. It is the calm, normal state of the volatility surface. When structure is in contango, conditions for income strategies like iron condors are generally more stable. Elsewhere in markets today, the US dollar index fell approximately 0.7%, a meaningful softening of the dollar that often accompanies risk-on flows into equities. Bitcoin gained nearly 2%, and Ethereum climbed roughly 3.5%. Gold added about 1.5%, and crude oil, that was the outlier, fell nearly 6% on the session. That combination of rising equities, rising crypto, rising gold, and falling oil paints a somewhat mixed picture. Risk appetite was clearly present in stocks and digital assets, but the sharp drop in crude suggests demand concerns or geopolitical de-escalation may be weighing on energy markets specifically. Let's look at what drove today's session through the lens of the headlines. The dominant story today was one of relief. Reports described the trade war as effectively over for Wall Street, a phrase that, while bold, captures the sentiment shift we saw across asset classes. When geopolitical risk premiums come out of markets, volatility tends to compress quickly. And that is precisely what we saw in the VIX today, a sharp drop that reflects traders unwinding fear hedges and repositioning for calmer waters. And behind that headline, the Nasdaq's drive toward a 10th straight day of gains is no coincidence. Growth stocks tend to benefit most when rate fears ease and geopolitical clouds lift. Institutional money that had been sitting cautiously on the sidelines appears to be rotating back in, which brings us to the resistance question. One analyst note in circulation today suggested this rally, which has been strong, no question, may be approaching significant technical resistance levels on the S&P 500. That is worth watching. Rallies that run into overhead supply can stall, and when they do, volatility can spike back quickly. The fact that we are now at nearly 6970 on the S&P means the index has traveled a long distance in a short time. Meanwhile, the financial sector is in focus, with earnings season beginning to heat up. Forward-looking commentary from major banks this week could either confirm or challenge the optimistic narrative that has been driving prices higher. Taken together, today's headlines told the story of a market exhaling, geopolitical tension easing, momentum building, and risk assets broadly advancing. But underneath that exhale, a quiet question mark about how much further this move can run before it needs to rest. Now let's look beneath the surface at volatility. The VIX at 18.36 is declining, and that is the headline. But context matters. Even with today's sharp drop, the VIX remains above 15. That level, 15, is not arbitrary. It is the threshold built into the VIXShield entry framework. Above 15, the system recognizes that implied volatility is still elevated enough to represent meaningful risk for short premium strategies. The 10-day historical volatility, that is, how much the S&P has actually moved over the last 10 trading sessions, came in at 17.21%. That is the realized volatility reading. Compare that to the VIX at 18.36. When implied volatility and realized volatility are trading close together, as they are today, it suggests the options market is pricing risk fairly. There is no dramatic overpricing of fear, but there is no deep discount either. The expected daily range, our EDR indicator, came in today at 1.46%. That is just below the critical 1.5% threshold. The EDR entry gate was technically met, and yet the overall signal today was still a hold. Here is why. Now the strategy insight for today. The VIXShield entry framework requires two conditions to be satisfied simultaneously before a new iron Condor position is considered. First, the VIX must be below 15. Second, the expected daily range must be below 1.5%. Today, the EDR cleared its hurdle at 1.46%, but the VIX, even after its sharp decline, came in at 18.36 on a signal estimate basis of 19.19. That is still above 15. The decision, therefore, is hold. This is not a close call that got rounded the wrong way. The VIX entry gate exists precisely for moments like this, when markets feel like they are calming down, when momentum is strong, and when the temptation to jump in is real. The rule says, not yet, and the rule has said that for 7 consecutive sessions now. That is the discipline story of this week. Had conditions been met today, the structure we would have evaluated looked like this. On the conservative tier, a spread built around the 67.35 and 67.40 put strikes on the downside, and the 70.35 and 70.40 call strikes on the upside, with a net credit of 65 cents per contract and a maximum loss of $435. The risk to reward ratio on that structure would have been 6.7 to 1. On the balanced tier, the 67.55 and 67.60 puts, paired with the 70.15 and 70.20 calls, for a net credit of $1.10 and a maximum loss of $390. A risk to reward of 3.5 to 1. The aggressive tier was not active today. The theta time shift indicator is currently in forward mode, suggesting that if and when entry conditions are met, extending duration to approximately 7 days to expiration would be the preferred posture. Capturing additional vega in the range of 45 to 80 cents per contract. On the hedge side, the ALVH protection framework, the Adaptive Layered Volatility hedge, has two of its three layers active. The short-term spike guard and the medium-term wave shield are both in place. The long-term endurance hedge remains inactive, consistent with the current contango regime. The structure we watch for is simple: VIX below 15, EDR below 1.5%. When both gates open at the same time, that is when the framework acts. 7 consecutive hold days. Let that settle for a moment. 7 sessions where the rules said, "Not yet." And in a market that rallied more than 8% off its lows during that stretch, the temptation to override the system must have been significant for many traders. That is exactly the kind of pressure that erodes discipline over time. Here is the lesson worth carrying forward. A hold day that avoids a losing trade is not a missed opportunity. It is capital preserved, and capital preserved is capital available when the setup finally arrives. Looking ahead to Wednesday, watch the VIX closely. If it continues its descent and approaches the 15 level, the entry gate begins to come into view. Financial sector earnings commentary will be a key catalyst. Any surprise, positive or negative, could move volatility quickly in either direction. Also watch crude oil. A continued decline in energy prices could signal broader demand concerns that eventually find their way into equity sentiment. The level to watch on the S&P is simple. Can it hold above 6,900? If it pulls back toward that level and the VIX spikes, we may see conditions shift. If it continues higher, volatility may compress further, and the entry gate could open sooner than expected. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VIXShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VIXShield, your protection against daily uncertainty. And with that, we close out Tuesday, April 14th. VIXShield signals are for educational and informational purposes only. This content does not constitute investment advice, a solicitation, or a recommendation to buy or sell any security. Options trading involves significant risk and is not suitable for all investors. Past performance is not indicative of future results. Always consult a licensed financial advisor before making investment decisions. Today is a hold day. The VIX entry gate was not met. No new iron Condor positions should be opened. This is an educational example of how the entry rules protect capital during unfavorable conditions. This market recap is for informational purposes only. Today's VIXShield signal data is provided to illustrate the methodology described in the SPX Mastery book series. This is not a trade recommendation. Review all risk disclosures at vixshield.com/disclaimer before trading. We are here every market day. Trade with discipline. Protect your capital. We will see you tomorrow. This is VIXShield, your daily protection against market uncertainty.